Speak to just what this recovery looks like, but also how you're thinking about growth versus profitability in terms of what that balance looks like in terms of how you're approaching this going forward.
Yeah, so first off, the team has done an incredible job exceeding expectations on pulling in our annualized fixed costs. So we targeted $300 million last year to pull out, and we reached $360 million pulled out of our cost structure. So we're incredibly happy about that. As we look forward, we expect an inflection point in Q2. We expect Lyft to be an incredibly well-positioned recovery stock. And that's where we see the growth happening, coming out of the vaccines being distributed, going into the second half of next year.
The reason I mentioned this idea of the balance between growth and profitability is clearly you're cutting. And the question is, how much of the cuts cut to the muscle, cut to the bone? What does that mean for growth? Does it change that trajectory in either way?
No, we're still very early on in what we want to build. And so our focus will be growth. The cuts that we did over last year were we put our heads down and we built better infrastructure. And so there was a reduction to the team size, but the primary work that we did is foundational, just builds a better business, builds a better cost structure, and will not impact our ability to grow.
You have been focused on passengers in vehicles while your biggest competitor, Uber, has spent a lot of its mind share building out the food delivery business. How do you think that differentiates both of you? And to the extent that Uber is going to get bigger, does that make it harder for you, even on the passenger side, to the extent that perhaps they'll be able to discount in the future in ways that might be more challenging for you?
Yeah, I mean, we've been hearing this for almost a decade. Lyft has been that underdog that has been doubted, has been counted out multiple times, and we keep coming back stronger. We keep growing our share. Our focus is paying off, and it will continue to pay off. So they're showing that they are not winning in the food delivery space, that there is not the synergies that they pointed to, and our focus on transportation of passengers will help us win in this space.
You are sticking with your investments in building out an autonomous vehicle, and that effort. Uber has stopped. Speak to why you're staying in, and I'm curious what you first thought when you heard the news that Uber was getting out of that business.
I don't react too strongly to what our competitor does. Again, my co-founder and I have been at this for Lyft for over 8 years, but working together for over 13, focused on the same mission. So we're focused on what we control, what we do, and what we believe is the right strategy, and that is paying off and will continue to pay off over time. In terms of autonomous, we feel incredibly well positioned as the rideshare network that has all the capabilities to increase the revenue per mile of an autonomous vehicle and decrease the cost per mile of an autonomous vehicle. What we're doing, there's multiple aspects to, including fleet management and investments that others aren't making in the business. And so we have a two-pronged strategy, which is developing our own data-driven autonomy, as well as working with an open platform, which allows other companies with great technology to put their vehicles and make the most money on our platform.
You made some comments recently about not being in the food business, but suggesting that you might be in the get into the non-perishable business. What does that mean?
So the way we look at delivery is more B2B. So we are not building a consumer marketplace for food delivery or for other products. But what we're seeing is kind of the trend in the pandemic, obviously, is more delivery, more e-commerce. And what retailers are looking for is a partner that doesn't step in between them and their customer. And in the pandemic, they had to move quickly and get onto these third-party platforms. But coming out of it, they're looking to build their own infrastructure, of which we could play a really big part, being their logistics arm to help them have a nationwide coverage for delivery, a last-mile delivery within a city, without needing to let someone else get between them and their customer.
Shepard Smith here. Thanks for watching CNBC on YouTube.